Markets can't seem to get enough of Syria, and here to talk a little bit about more of it and whether it actually does matter to the markets is Tim Gramatovich. Tim, thanks for coming into the studio.
Great, Joe. Thanks for having me.
Tim, are you guys seeing this, how things are playing out with Syria, all the discussions in Congress, Secretary Kerry, President Obama? Does it actually matter to the markets at all?
I think it does. I think there's certainly there's a massive fear premium that is sort of built into the process. Perhaps not so much in oil, which we can discuss a little bit later, but in general, yeah, it does. I mean, you have incredible instability in the region, and so yeah, it does matter. Not so much just to the oil markets fundamentally, but to the fear premium, yes.
So, are there any comparisons to draw to Iraq 2003? Obviously, Iraq 2003, large discussion was oil pipelines, so the oil production coming out of there. Syria, not as big of an oil producer as Iraq, not even close.
Yeah, the fear, Joe, the fear really involves the pipeline and the infrastructure, as you said. And of course, the other talk we have is spillover into these other countries. Yeah. I'm not so concerned about the spillover as what's being exposed, I think, with this discussion is the facade of our notion of energy independence here in the U.S. It's just not, it's not close. I mean, we are producing somewhere between 6 and 7 million barrels a day of oil. We're consuming 20 million. So the notion of us somehow being independent is it's a facade. It's not going to happen. So it matters, and it matters to our standard of living and our quality of life. And one other factor that we throw in for investors as well is 15 years ago, the CFO of Walmart came out and said our number one correlation in terms of retail sales involves gasoline prices. And as gasoline goes down, our sales tend to go up. As gasoline prices rise, our sales tend to go down. So it does matter from a consumer spending perspective.
So then you do think that this discussion about Syria, it's still at the heart of it, does have a discussion about oil?
Yes, without question. As much as we would all like to believe it isn't, and it was all about humanitarian issues, which partially it certainly isn't, it should be. There's absolutely no question that you're concerned about the region for that production. That is reality. As we discussed earlier, Syria, maybe 50,000 barrels a day, really on a 90 million barrel per day production cycle globally, a rounding error, right? But the reality is the regional stability is all about oil.
So how does an investor get through this, all of the chatter? Do they just sit on the sidelines until they get something hard out of it?
No, I think what this has done, and Joe, for us too, is we were a bit early. We're on the credit side of the business, so we're high yield investors. And I think what people have a misnomer of is that the bond market can't be actively managed from an industry or company perspective as the equity market can. And of course, nothing is further from the truth. I think that what we have is an ability to tilt our companies and our industry exposure towards energy. And I think what's happening here is a gradual realization that oil prices, they haven't jumped a great deal with the Syrian situation right now, but they're not going down, right? We have global economic weakness across the globe. We have, very, very mediocre demand growth, even in Asia, but a marginal cost of a new barrel of production is still $100, and so you're not going to see oil prices fall below $100.
Sure. Well, Tim Gramatovich, as you know and as we know, there's much more going on in this world than just Syria. Much more economic news left to come in September. Thanks so much for being here.
Thanks for having me, Joe.
For The Street, I'm Joe Deaux.